Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, I'm going to take you through the week ahead. We're going to have a look at some Forex weekly trading ideas, some data, as well as some charts. So let's go take a look at the data. And I mean, what a week we've got ahead of us. It is a huge, high impact trading week, and we have three central bank decisions, one from the Bank of Japan, one from the US FOMC, and one from the Bank of England. But not only that, we've got inflation data out of Australia as well as Switzerland, and then we've got average hourly earnings, non-farm payroll data, the unemployment rate out of the US on Friday. So this is going to be a very high impact news week, and it could cause that volatility to increase. We talked about the volatility index last week and the VIX rising 14% last week. Is that going to be a sentiment that continues going into this trading week? Three things that we've definitely just got to keep our eyes on is the Bank of Japan. Bank of Japan expected to potentially hike interest rates this week. I personally don't see that happening, but it's still something that could happen. We did see Tokyo's CPI or core CPI rise 2.2% on or 2.2% on Friday. So that could be an influence behind why many are expecting the Bank of Japan to hike interest rates. I don't think they're at a level to do that yet, but that is something that will be watched very, very closely. We then have the FOMC federal funds rate decision expected to hold at 5.5%. That is highly likely. We've seen a sort of 90% chance that market participants are expecting a hold at this meeting. However, September, there's still 100% certainty right now that we are going to see a cut from the Federal Reserve. Bank of England expected to cut interest rates from 5.25% to 5%. We can see the changes in the MPC official bank rate votes here. So what this is showing us here is that 0 are expecting a hike. We are seeing 6 potentially now expecting a cut, whilst 3 members expecting a hold. Previous was 0 to 7. So definitely weighted towards the cut side. However, this meeting is a little bit of a 50-50. We did see the BOE's chief economist earlier this month stating that inflation pressures are still around. So maybe this one or a cut in this meeting is not necessarily a certainty. So it'd be interesting to see what happens here with the Bank of England's interest rates. Typically, if we do see a forecasted on the calendar, it can happen. So I'm expecting some volatility around cable this week. And then average hourly earnings, expecting a decrease in the employment change. 177,000 jobs expected to be created for the month of July, as we're going into that meeting in August, or 206k in the previous meeting. So it'll be interesting to see what happens there. Talking about sentiment then and currency strength and weakness, not too much in the way of change. Still looking to be more on the bearish side in the New Zealand dollar and potentially the Canadian dollar. The Australian dollar lost a lot of strength last week across the board. It's not really reflected here in the change on the table because the market was already kind of changing those trends in the previous week. So it's not really been reflected here too much. Dollar is showing as a little bit of a potential reversal currency right now. Don't know whether I trust this at the moment, but if the Federal Reserve keep those rates higher and everyone else is cutting, then yes, the dollar could remain stronger than the other G7 currencies. Going on to the US dollar index, then we're looking at the idea that the dollar index could hold above 104. However, last week didn't really fill me with a lot of joy if I was going to be a buyer in the market. We just stalled last week, and stalling at a level of support is not necessarily great if you want to be a buyer. Typically, I'd want to see a very strong push away. Although we did stall here previously, when price did tap into the lower levels, we had very strong pushes away of price. Not really getting that this time, so we could go either way here. I feel on the US dollar index, I'm looking at if we breach 104s again, it could highlight a potential move down into the 102.50s. If we break into the higher levels against these weekly highs here around about 104.50s, then we could see a little bit of buying coming back in. Looking at cable, I do feel that the pound, it could be weaker this week, especially if we are expecting a rate cut from the Bank of England. We are seeing heavy selling on the commitment of traders as well on the pound at the moment. Against the US dollar, we've had 2 weeks of decline coming from those 1.3s down towards the 1.2860s, where we found a little bit of support from this previous resistance. So I think if we breach these previous highs there acting as support, then we could see a little bit more of a further decline, perhaps back down towards the 127 sort of supply zone there, or demand zone in the market. So this demand down at 127 could be met again over the next couple of weeks. Going on to dollar yen then. So again, dollar yen going to be a big mover this week because we have the interest rate decisions from the Bank of Japan, from the Federal Reserve, and we are at this 152 level, which has been a very strong level of support and resistance in the past. Is that going to be the same this time? We did get a rebound of about 137 pips from that 152 handle, so if that can hold, then we could see some short-term upside to dollar yen. Breaks below 152 will open the door up to 146.50. Finally then, on gold, we rejected that 24.50 high recently. Last week we did see quite a bearish gold, however we did recover on Friday and price closed above the 50% of that weekly range. So that could be a sign that buyers are still happy to buy on dips on gold at the moment. So definitely something to watch going into a week where we're seeing such high red folder data releases. So this market week could be very, very tricky. I hope you have a good trading week, and if you enjoyed this video, hit that thumbs up button and subscribe to our YouTube channel. Thanks for watching, guys, and I'll speak to you soon.